Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 20th of June, 2017. Thanks for joining me again for another Trader Bite. It is my hope that by now, at least if you've been around for a while, by now you have adopted some or all of the approach that I'm sharing with you here. And the end goal is to make it your own and to create a baseline and a foundation from which your trading can take off and see some consistency, hopefully. So that's why we're here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance right now is slightly on the risk averse side. We're seeing risk off in most equities, seeing crude down 2.45%, a big gap on the pit session. Yesterday's close was at 44.46, currently trading 43.35. Crude down $1.10 as of this moment. Crude's followed by the Russell on the downside. Russell's down 3.2 points or 0.23%. The rest of the indices follow suit, but only down, slightly unchanged to just slightly down a couple points here and there. The U.S. bond is the leader today. It's up 15 ticks, followed by the Bund, the Japanese yen, and U.S. dollar, and those are your safety instruments right there. So the market's allocating to safety this morning, but only slightly. As far as news is concerned, um, not too much to talk about. Bank of England Governor Carney said he did not believe it was time for Britain's central bank to raise interest rates, despite the inflation climbing sharply above the bank's target in recent months. So he's quelling fears that there's likely to be a raise there. This has sent the cable down. The cable is down 0.55%, trading at $1.267 to the pound. Also, oil falls as concerns on oversupplies continue. You know, OPEC created these restraints on supply, but it doesn't seem to be quelling the glut that's coming into the market. We'll get more color on that with the API release after the close today, and of course the weekly crude oil inventories tomorrow. But there is a large gap in crude away from balance. I'll show that momentarily, just so we see what crude's doing overall. But it's definitely something to keep an eye on. Seeing some pretty relatively clean opportunities, in my opinion, on crude. Um, and then as far as other news, there's really not much that is likely to drive us here this morning. There's chatter from Feds Evans and others, but overall not seeing anything that's terribly of concern to our trading this morning. As far as numbers, not seeing anything on deck. Um, Speakers, we're getting Fed Speaker Kaplan at 3 p.m. today, and that's about it. Okay, so let's quickly switch gears to what we talked about yesterday. Here we go. So yesterday we're opening in a gap up. At the time, the market was trading at 24.39. The expectation is for responsive selling initially, looking for the market to take a downdraft towards the prior day's support, which is outlined in white right there in the 24 in the 24.31.32 area, and then the market. Then I was expecting it to consolidate, possibly dip, consolidate, and then I was looking for the largest move of the day to be impulsive. So here we're getting responsive movement down into the prior day's range, but looking for an impulsive move into new all-time highs later in the session. That was Hypo 1. Hypo 1 was looking for the market to actually get to or touch the prior day's range, closing the gap. Hypo 2 was much more aggressive. Hypo 2 is looking for an open auction that becomes impulsive. I wrote an I on the screen here. That means impulsive. Impulsive means we're moving away. We're moving away from value. Responsive is moving towards value. So responsive from the bottom is a move up towards prior value. Responsive from the top is a move down to prior value. Impulsive means we're moving away from where the last auction had occurred. Remember, the auction represents the area that the market saw value, and so as we move away from it, that's what we're looking at. So yesterday's plan was impulsive. We're looking for a push through the overnight high, and then we're looking for an impulsive move up, a large move up, and then for the market to consolidate into the afternoon and then drop in the afternoon. I did not expect it to push as high as it did. We were looking at, I think the new all-time high put in initiative, not impulsive. I appreciate that, Peter. I didn't. The I is not for impulsive. Impulsive is the move, is the swing. Initiative is the move away from the range. I'm focusing on too much information. The high that was the new all-time high that was put in is 24.5150, and that's where we ended up holding yesterday, and then we sold off into the close. The third hypothesis was responsive, looking for a push into the MC point of control at 24.30 and a quarter, and then looking for the market to get stuck there for a bit, and then to rally into the close. And so here's what we got. This is what we got yesterday. We got a small opening swing. The opening swing could be argued at 24.4250. It doesn't really matter. But the market took off from there. We have our impulsive move here. We have our gap zone underneath there. So for those of you who use the flex levels, you have your gap zone marked in gray back here. The gap is between 32.50 and 38.50. It's a 6-point gap. The market completely failed to test that gap, which means that it's likely to go initiative, and you want to trade from the long side only. For the stronger hand, the long side only yesterday, and then for the weaker hand, which means short-term trades, potentially even scalps, are short. The base yesterday that was built, that was really well defined to me, and I was hoping the market would pull back to for a good strong long, was 24.43, right against the all-time high, and we have a zipper, plus we had the mid right there. So a nice little move down would have created a great opportunity for a long. But overall, I found it difficult to find spots to get long yesterday. It was one of those things where you just had to get long, take a fair amount of heat to be part of the next rotation. Selling into the close is expected. The day type is normal variation. The point of control remained inside of the IB above the mid, and the market closed inside of the IB. Not very bullish into the close, even though the high had a quick taper on it. The overall close was not very bullish into a what looked like a trend day. So we trended early, and then we just went sideways for the afternoon, and the close, again, not particularly bullish. A bullish close would put us in the upper 25% of the range, and above the point of control. We basically closed right in the point of control. We closed right inside the IB. So overnight, the expectation was for it to be quiet, for the market to be quiet and sideways. And what we got yesterday was just that. It really didn't accomplish much. We had a little bit of range. The volume is back to normal, 141,000 in the overnight session. It did try to test up into that high. It got to 51. Remember, the all-time high is 51.50. And so it starts to roll over. We're trading below mid, below the point of control, and we're trading in this lower distribution coming into today, right against the swing low before the close yesterday at 24.4550. We're at 46 and a quarter. So it gives us a very interesting way to start the day. As far as what we're expecting this morning, so this morning I'm looking for, we still have this gap below us, so let me turn on flex levels here. See how there's a lot there beneath us. We still have a gap below us. The expectation this morning is, again, for an open auction. I'm looking for the market to make an attempt lower. I'm looking for it to push into 43. I'm looking for initial support at 43. If 43 holds, that'll be hypo 1. It starts to push back up into the high, potentially poking the high and falling back into the close today. So for hypo 1, I'm looking again for to be more responsive into the point of control above, and I'm looking for it to make another attempt at a high to test, to stick its arm out and see what's above here. If there's any further interest by the buyers above those prices, and to entice sellers to step in. Once it finds its sellers, it's likely to rotate down. That is the primary hypo, is for it to pull back down, look for a base, get long, look for a rotation into the point of control, and in towards potentially not getting the 5150, but towards the 5150. Make sure you scale out before the 5150, probably by a few ticks. That's what I'm planning. And then I'm looking for it to fall back in. This with a gap, the market's not likely to continue to run very easily. It's, remember, a market that starts with a sprint like it did yesterday. Needs an opportunity to catch its breath before it moves further, right? And then the secondary hypothesis is, if we open and start pushing higher immediately, I'm looking for a failed high for it to become responsive and to start moving towards the stem of yesterday, and then to finish somewhere below the point of control of yesterday, giving us the rotation in value, basically the beginning of a short-term top. That's what I'm looking for as far as hypo 2. Don't expect too much today. The good news is it's Tuesday, and we don't have too much driving us on the calendar, so the market's able to move, hopefully is able to move under its own power without waiting for some sort of um, external input. So that's really what I'm looking for today. Okay, so I'll leave you that nice and short and sweet. Hopefully you're gaining something from these every day. Good luck today, and I'll catch you tomorrow morning. Take care.